What's up, YouTube? It's Yemi here again from SwingTradeFX, and I want to wish you a very happy new year. And there's no better way to start this year than showing you a specific strategy that I use, which has the propensity of turning you to a millionaire 2025, depending on how well you use it, right? I'm currently using this old technique right now on a running trader mean. And it's very simple. It's a swing trading strategy that has the propensity of guaranteeing you an explosive profit and capitalizing on a move. But before we get into the video, I want you to hit the subscribe button and I want you to share with your friends because this page is dedicated to helping you grow. And I want you to click on the link in the description to join my free Telegram channel where I drop weekly updates and nuggets and just helping you grow through your trading journey. Why that's been said, let's get straight into the video. So in today's video, I'm going to be addressing something really important, right? And this is not just for swing traders, right? This is for people who are still finding their rhythm in the market that necessarily don't know what direction to go because there's a lot of information on the market, right? And this is also for people who perhaps are working a 9 to 5 and you don't really have time to spend on the chart and you just want the money to work for you, which is literally what trading is all about, right? I personally believe that the most sustainable way to trade the market is just to find all these moves, find this position and capitalize on it and let the money work for you, not sitting down on the market every day, monitoring every move in the market. And I'm going to be showing you this. And what I'm going to be showing you is just giving you the methodology to achieving this kind of explosive way. And on the screen right now, you can see this is literally just the proof of concept because I want to be able to break it down for you guys in such a way that you guys have a deep understanding and make it so simple enough that anyone can literally grasp it, right? So on the screen right now, you can see I just use this as a prototype for you to see right now. From what you can see, you can tell that this is the market moving on an uptrend, right? And there are specific entry at specific points that has the propensity of 10xing whatever it is that you initially plan to make on this trade. So let's look at it. For example, if this is going to give you 1:10, the next move perhaps could have propensity of giving you 1:8 and the next move 1:7. So when you kind of look at it, right, initially you saw an opportunity for 1:10, but along the line you were still able to make 1:15 and 16, right? And when you combine the whole combined profit, right, you're going to realize that you're making even way more than you initially projected. It's very simple. It's just the ability to capitalize on a move. However, it is a very simple technique, but there are caveats to it, right? So, but before we get into the mechanics of things, I'd like to just give you a few things that you got to consider when you want to practice a technique like this, because I can tell you for a fact that it's so rewarding. And I'm going to be showing you a live example of a trade I'm currently on and my war room community is currently on right now, okay? So, let's get into it. But before we get into, the main mechanics of everything, I have to explain this to you that you have to be very skillful to do this. It doesn't really necessarily have to be hard, but you have to be very spot on the skill that is needed for you to achieve this, right? So if perhaps you're new to the market, if perhaps you are not yet structured and stable, right, in the way you trade, I would recommend that you get the fundamental knowledge. And I definitely 100% recommend my mentorship program, which is going to train you. Then you can now begin to capitalize on that as a foundation and use that to practice all of this. I'm operating right now on this level, right? And it takes a lot of skill. It's so easy, but it takes a lot of skill. Do you understand what I mean? It doesn't have to be so technical. You don't have to use all these indicators and go through all this rigorous, words and, all this crazy, complication that people put in the market right now. It's a simple technique, but you need your foundation to be straightened first for you to be able to apply it. So let's get into it. So for us to be able to understand how to use this, I would like to actually explain specific elements that we use to achieving this, right? And one of the elements is, let's go to the downside. We have three major elements, right? We use in achieving this particular explosive strategy, right? First of all, we need to have an understanding of the trend, right? Because as you can see, everything we're capitalizing on from the first for the first picture I showed you is just the trend. We want to be able to be sure about where the trend is going, and we want to be able to find, you know, the structure of the market, which is the second thing you have to understand. And you want to be able to have a very, very accurate understanding of how to find this area of interest, right? So all of these three things are intertwined, right? You need to be able to have a knowledge of trend to be able to obtain structure. And for you to obtain structure, you want to be able to use the knowledge of the structure to obtain this area of interest where you are going to be using to be loading on and scaling on positions, right? Since this explosive strategy I'm talking about involves maximizing a move and scaling in at specific level. We're not doing that carelessly, right? We want to be able to enter a specific level in such a way that when we enter, the market can move again and we can break even our trade and we can render our trade risk-free. So that's just the game plan, right? So I'm just quickly going to touch up on these few things. If you really want to understand about trend, I think I made a video on trends. You can watch it. If you really want to understand about structures as well, I've already made a video about structures and all of that, right? And if you have watched it before and you want to take your journey to the next level, I definitely recommend you sign up to our academy, which the link is in the description. So let's talk about the trend for a minute, right? It's very simple concept. What is a trend? A trend is just, it shows us the direction where the market is going to. So there are two types of trend. We have the uptrend and we have the downtrend, right? I want you to pay attention because I'm going to explain something, and this perhaps might make a difference in your trading, right? Now, when we are taking or we want to identify the trend, we don't need any special technical skill, right, to identify trend. However, when we get to structures, we need specific skill to identify structures, right? So in trend, when you want to identify the trend of a market, you literally can just zoom the trend and make the chart smaller, and you can literally get your data as very immediate as possible. But when it comes to structure, right, structure requires a technical skill. So let me give an example, right? Now, within a trend, there are many structures, right? So for example, this is a big structure. I'm just going to use the word big. This is a smaller structure, and we have a bigger structure, right? And the same thing happens in the case of the downtrend as well, right? It's a trend. Literally, in essence, I want you to write this down. A trend, in essence, is a combination of all kinds of structure that made up just the direction of the market, right? So within a trend, you're going to find different structure points, right? Whether it's a major structure or a minor structure, but everything zoomed together, everything combined together defines the trend and the direction of the market. Now, in the case of you identifying structure, you have to be pretty clear because the structure of the market are always inclined in such a way that they are very consistent, right? So for example, when you look at this example I put right here, you can see that the retracement of this structure are almost the same thing, right? Now, in the case of structure, I see a lot of traders make a lot of mistake, right? And let me just put it out there. A lot of trader makes a lot of mistakes in such a way that when they're identifying structure, they identify the major structure and the minor structure together, then the major, then the minor. This is a very wrong way of identifying structures, because this is really going to help you. Now, for some of you that you are trying to, perhaps you've been looking for a way to practice this strategy I'm about to teach you, just to pick a direction of the market and just keep adding on. You'll realize that many of you, 90% of you, you find out that even when you break even, the market hits you out and continue in the direction of the market, right? That's because you literally have not defined the differences between structures and trend, right? Trend is just a marketplace of all of the structures present. Why structure has to be very specific? So you cannot mix the major and minor structure. You need to be very distinctive in your approach towards those structures, right? And I'm going to show you an example when I show you a live example, and just even a current trade I'm in right now. And this is very important, right? I'm saying this from a very surface level, right? I explained this so deep in my course, and I want everyone to be able to have this understanding, because many of you guys are frustrated. You want to be able to maximize a moving trend, but you seem not to be able to do that, because every time you take a trade and a moving profit and you break even, the market hit you out and continue in that direction. So many of you guys have not been able to figure this out. And some of us are doing it so easily because we understand how the structures work. We know the difference between trend and structures, and we've understood how to play with major structure, minor structure, how to scale in. Even while I'm holding, for example, a buy trade that I'm in right now, I'm still able to take even some minor buy, and I'm able to scale in and out while I wait for the major retracement to happen before I, load in a new position in the direction of my trend. This is a very, very important skill. So the last thing I'm going to talk about in this part is what we call the area of interest. Okay, what is area of interest? It's literally just very simple, right? Area of interest entails, what are the specific levels in the market where the market can find a reaction or a rejection. So for example, if the market is moving on a higher high and higher low, let's say the trend is high, the trend is low, what factors, the question is, what factors are this level that the market is getting to before it starts to reject in the direction of the market? That's what we call the area of interest. So these areas of interest are areas where you can literally be able to find opportunities to join the trend in the market, right? And it's not really very, very hard. It's something that you literally know. So cutting across all strategies that you can ever think of or anything, area of interest are factored majorly by 3 tools, right? The support and resistance can be used to find an area of interest. As you can see, sometimes the market might be moving to the upside, come back and retest at previous area of support or previous area of resistance. In this case, previous area of resistance turn support. That could literally be an area of interest, and you could find a trade opportunity right here, right? In another case, we talk about the trend line, right? The trend line after the market hit the third time. I spoke extensively about the trend line in my early videos. I'm going to pin it in the card above, right, so that you guys can watch it. And on the third touch of a trend line, you can literally be able to find an entry opportunity, right? And I spoke deeply about this trend line because most people underrate the power of trend line. I spoke deeply about trend line and how to combine it with other tools to get high probability area of interest in my course, right? And for my students that are watching, you guys definitely know I really spend time on that. So then the last thing is the Fibonacci, right? The Fibonacci also does the same job as this, right? The only difference is that they are just different tools, but they perform the same function. They are used to get this area where the retracement in the market is ending in the case of the push, in the case of maybe a buy or a sell, right? Now, the caveat to all these 3 is this, right? Whenever you're trying to find a trade opportunity, you literally don't know the one that's going to present itself. And that's why you want to have the knowledge of either of this, right? So usually when the market wants to find a reaction on a level, it's either it finds it on the area of support or resistance, or it finds it around the trend line, or it finds it around the Fibonacci level. You don't need indicators for all this. These things are really, really very simple. So it becomes your own goal as a trader to know which of these tools is going to factor the area of interest. Now, we have some caveat in the market where the market might actually give us a high probability area of interest. It's usually in a situation where support and resistance, intersect, trend line. What do I mean? Say, for example, you're looking at a trade like this and you're looking forward to finding the area of interest at this level. Now, not only, sometimes you might just find out that the trend line, you might just find out that maybe, for example, trend line to this area, just let me bring it to this area for the sake of understanding, right? So you might find out that this is a very strong area of interest because the market made the first touch, second touch, and it's coming for this level for the third touch. And you might also find out that this level is also a level of previous area of resistance right here, turn support. So now look at it, previous area of resistance turning into support, and also an area of touch 1, touch 2, touch 3. Now what happened right here? We can see that there's right here an intersection right here. There's an intersection right here, right? The market made an intersection right at this point, right? So usually this point of intersection are always a very high probability trade, that any trade that you find right here has a propensity, right? Any trade you find around here has a propensity of respecting, right? So these are the little techniques you want to use in playing, around your area of interest. I hope we're all learning, okay? This is one of the very high probability way that you can find, trade opportunities in the market. And I took my time to explain this in the Freedom Park, right? In the Freedom Cup, right? So now, what is the next step? So now that we understand that all we need to be able to perform this explosive strategy are just the knowledge of trend, ability to translate those trends into specific structures, and finding area of interest, then finding our entry and unloading, right? So that is what we need here, right? So that means at specific point that you're seeing right here, these are all area of interest that we obtain. You see, these are all areas of interest that we obtain. When you take this to the left, you can see right here that this previous area of resistance, turn support, and these are all area of interest. These also could be an, is an area of trend line right here, and could also be an area of 61.8 Fibonacci level, right? As you can see right here. So this is how we actually want to operate. So let's go into the live chart now, and let me show you guys how to put it to work. I mean, the mechanics of putting all of this together, and let's make it work in the market. So let's go. Okay. So before we get into the mechanics of everything, right, I'd love to give you a summary of what we are looking to achieve, right, using this specific, system and strategy, right? It's very simple. The goal is for us to capitalize on a trend, right, by actually leveraging on our understanding of structures, right, and areas of interest. Now, when it comes to the risk part, now I want you guys to hear this clearly. You see, for where it comes to the risk, right, we are not actually adding up risk. What we're doing is that we're taking up the risk from the first entry, transferring it to the second entry, taking the risk from the second entry and transferring to the third entry, right? And perhaps by the time we even get to the third entry, we are not even taking risk of our capital again. We're only transferring the profitable equity from the second entry into the third one. This is what I mean. I want you guys to look at it this way. So let's say we have a trade that is already moving like this, and like this, and like this, and these are all specific levels of retracement as presented to us, and we have our specific area of interest. The structures are right on game. We're able to connect all the right structures together. Guess what? Our first entry goes this way. I just want to explain this to you so that you guys can have an understanding, because a lot of you guys do it very wrongly, right? So let's say we find our first entry right here, and our second entry is sitting right at this level. Our second entry is sitting right at this level. We found an area of interest right here, and we are always going to our target, right? So let me just explain that concept real quick before we get into the mechanics, right? So what we are not doing right here, a lot of you guys think what we're doing is, let's say we have 2% risk right here. We're going to take 2% risk right here, 2% risk right here, making 6%. No, what we're doing is our initial 2% risk that we have right here. By the time we enter right here, this is going to be on break even. We're going to move our stop loss right here. Now, what has happened? This right here now becomes risk-free. This is a 0%. It becomes risk-free, right? Now, the new risk right here is transferred to this point. So now we are on two positions with the same risk, right? By the time we transfer this 2%, right, and we bring it up here, guess what happens right here? This is running risk-free. So by the time the market is here, now we're not even risking of the account anymore. What we're doing now is we are now risking of the equity of this trade. These two trades perhaps must have moved in some very good profit by the time we get to this point. So what we're doing now is we're transferring equity off the floating profit to this level to maintain the same 2%. So even if the market eats us out right here, we're still going to be out in overall profit, right? And if the market goes, guess what? And hit this level, it's going to be explosive profits. You need to understand the system. So harding position doesn't mean harding risk. It's just a game of transferring risk from the first entry to the second. Then from the second and third, you are transferring equity in floating profit and using it as a risk to just maximize your trade so that you can 10x, the outcome of that trade. So this is just what we're trying to do right here. And I want you to be able to do this. So let's get into the chart so that I can show you real quick. So I'm not going to get into the mechanics of how we got it set up, and there's no perfect way to explain to you than to use a trade I'm currently on using the same systems, right? Literally, I'm teaching the system and concept, right? And it can be so easy when you grasp the knowledge, right? So now look at this, right? I'm not going to go into the mechanics, like I said, of how, we got about the setup. If you want to watch that, you're going to see the link to the last video pinned, right above this level. And, I dropped that last video and the setup live, and I can see hundreds of screenshots. A lot of people just picked it randomly, and they are already like profit right now, and I'm going to show you that. Okay, so what we see right here is that we add an analysis that stated that the market is making a move because the market has been on a bullish run, right? And when you look at also the minor structure, the market has been moving a higher low at this point, right? So we have the market take off right at this point. So what we want to do is to capitalize the move from this point to this point, right? We saw an opportunity. Now let's bring it to the 4 hours to see clearly. We can see right clearly. Then let's go to 1 hour where the old magic happens. Now the first thing I want you to understand, based on what I've taught you earlier, is the fact that the market is going on where? An uptrend. So the trend does not need any technical skill for you to understand. We can see that the market is going uptrend, and in an uptrend, sorry, we can see that the market is going in an uptrend, okay, and that is just enough. Now, we don't need any technical skill for that, like I said earlier, right? Now, the next thing we want to do is to identify the structure point. So I'm just going to show you from the point where we started leveraging on this opportunity, right? So but then I'm going to take you historical to see how the structures have been building up right from time. So when the market started to find this reversal and the market broke from this level to from this level right here, we started to have this first structure point right here. We didn't take advantage of this opportunity, by the way, right, of this first opportunity, but then we joined in the moment the market got to this level. And what really happened? So first of all, we're going to look at it from a structural level. Then I'm going to tell you the reason why we got in on this trade. So from a structural level, what has the market done? The market has made a higher high, a higher low, right? Higher high, higher low, right? And sorry, the market is now making higher highs and low. This is supposed to be a higher low, but it refused to break, which makes it not a higher low. But I'm going to get to that later on. But before we even look at this, right, I want you to look at something. I'm just going to put this on the side right here, right? Now, within this trend now, if you want to get the structure, what do? It's very simple. You want to be able to identify all the trend you can see in between, all the structures you can see in between this point right here. Do you see all the structures right here? And then we have this, and then we have this tiny one right here. Then we have this right here. Then, we have this tiny one right here. And, the market is here. The market made this one right here, and now the market could not break this, and here we have the market, and now the market is making a move as much. Now let me take this two and bring it side by side. So what am I trying to do here? Look at it, right? I just want to teach you why the knowledge of structure is very important. Now, this is the trend, right? When we interpret the trend from a structural level, this is what the trend looks like, right? The trend does not need any technical skill. Now, this is the structure. What have we been able to do? It seemed to me as if we have been able to filter all the noises from this part and transfer it to a concrete structure right to this part, right? So what has happened? What really just happened right here is we've been able to take all the major structures right at this point, right? This is supposed to be a structure as well, but because the market refused to break above this, there is no structure. Let me give you guys a little tip, right? A little tip. I love to give tips, right? Now look at this. What preserves or what gives the integrity of this to be a higher low is the fact that the market broke above this level, this next high. What makes this a new higher low? It's not because it made a low, it's because it broke this level, right? So if you find your entry right and the market refuses to break this level, best believe the market might be coming down, right? So in a situation where the market refuses to break, what has happened right here? This is not the low. This right here could pass as a low. Why? Because it broke this level. This right here is a low because why? It broke this level. But if it refuses right at this point to break this level, guess what? This is not a low. And that was what happened right there. So for people that might want to have this question that, oh, why is this not a low? You know, I've answered your question up front, right? So now, can you see what had happened? Can you see what had happened? We've been able to translate this old trend, right, into structure. Now, a lot of top traders, even an average top trader, make the mistake of just missing this structure together. And this is the reason why many of you guys are going to find, let's say many of you guys probably you find an entry right here and you thought, oh, this is the next higher low, higher low, higher low, and you think all of these are of the same structure of fractals, and then the market come back down and hit you out and you're wondering, oh, the market hit me out and now the market is going in my direction. The only reason why that's happened to you all the time is because you've not been able to master the mechanics of structures in the market, right? Once you understand structure, you can be able to set your stop loss in such a way that the market will not eat you out, even if the market want to make retracement. In fact, while the market is eating everyone out, you are already preparing to load in a new position, just like the way I'm doing. And you can also be able to take the opportunity in between. So the first entry we took right here, how do we take this entry? It was very simple. When the market broke above this area of resistance right here and kind of turned into a support, remember our initial structure, right, was higher high, higher low. And the game plan was this, right? As long as the market goes up and it continues to retrace, if it fails to break below this level and give us a retracement to the upside, then perhaps we might be having a new structure form. And what did the market do? The market went back up and broke it. The moment the market broke it, we got in on our entry right here, and the market gave us our first entry. So we joined the trend. We know that the trend is to the upside, right? But we'll use our understanding of structure and area of interest, right, to join it. So what was the area of interest right here? It could either be Fibonacci, it could either be trend line, or it could either be support or resistance. In this case, because the market bounced off this level, we have this Fibonacci, and the market closed back into the 61.8 Fibonacci right here. This prompted our first entry, right? This prompted our first entry. So let's continue the story, right? So why the market moved to this point again? What really happened right from this point, right? So this technically this became our next low, right? Now, can you see how the uniforms are how the structures are uniform, right? Let's continue the story, right? So now, when the market got to this point, let's continue the story. When the market got to this point, what happened again? We start to see a retracement. Now, we look at this retracement, we look and saw that market is rejecting of a previous area of resistance, turning it into support. It's just that the reasons for the area of interest, and we can see that the structure aligned with all the other structure right here, right? So these are all major structures, right? The market is giving us a major retracement in direction of trend, right? And respecting structure, right? So the area of interest so far is previous area of resistance turned into a support. So what is the next thing we see right here? The next thing we see right here is that the market was rejecting a very strong 61.8 level. So this gives us the double confirmation. Remember what I told you guys, that when you have the intersection, the market is about to just go in a high probability fashion, right? And we came to our 30 minutes time frame. We're waiting to see if there was going to be a break of structure to the upside, right? And the moment the market gave us the break of structure to the upside, we retested this previous area of support right here, turning right here. The moment it started to give us this move to the upside, we took in this trade. So this became, the second trade I added in personally. Okay, this became the second trade I added in personally. The target remains the same. So what have I done right here? What I've been able to do is I've been able to pass the equity of this trade. I've been able to pass the risk of this trade, rendering this one risk-free. I've been able to pass it to this level by just the understanding of trend. I know where the trend is going to, and I know what the structures are. So once the market continues that, what do we have? We have a situation where the market make the move to the upside. Now, the market made a retracement. Oh, we saw another possible opportunity for us to take advantage of the market. So what do we have right here again? We have another market rejecting a previous area of resistance, turn support, and we're looking at the possibility of, a 61.8 Fibonacci, rejection right at that level. Sorry. At this level, do we have that? Yes, the market rejected the 61.8 Fibonacci level. Do you see that right here? So now we have another point of interest, right? And I waited to see if I'm also going to be finding the break structure. And, I found that right here again. Guess what again? The market continues to move to the upside, right? Now, I'm looking forward to targeting the next move. Now, remember, a trade that started with 1:11, our entry was about 1:11 point, right? A trader started with 1:11. Now I'm hiding in position, right? So now I'm looking at this level. If the market should break this level, remember what I explained earlier, this confirms the integrity of this point as a higher low. The market refused to break it. However, I scaled out of this position only on one reason, right? As the market continues to move, the market now got to this level and broke the structure, right? Upon the break of this level, I scaled out of this position, right? I was able to secure some profit, right? And that means I'm no longer in this position, right? I was able to secure some profit off that move, right? And now I'm looking at an opportunity again to this side. Say the market is coming to this area of support as driven by this level. Okay, could this be the next retracement before the market make it and continue to the upside? Trend is confirmed. We just want to find an area of interest that correlates and is congruent with our structure, right? So what did we do? We added and we started to see that, okay, this could not sustain. Okay, could it be this one right here? Now, when the market got to this level, as the market got to this point again, I'm looking forward to heading to this level. And what really happened right on this level? The market got to this point. The moment I realized that the market was rejecting this area of support and resistance, I was very hesitant, right? And what did the market do? Let's look at it. Remember, when the market started to move up, it started to move on this level. So I was very, very, very conscious of this level. So when the market got right here and the market continued to move to the downside, I scaled out of this position, closing in small profit as well, while I'm still holding my two trade opportunity. Now, what was the straw for me? The straw was very simple. Remember, I said that these markets, are higher low because it broke to the upside, higher low because it broke to the upside, and higher low not confirmed because it couldn't break. So my last higher low was right here. And the game plan was very simple. If the market could break below this level significantly, then that means, our anticipation analysis for the uptrend is not possible, right? So our stop loss was still here. We're still running on still the same risk, right? We didn't add any risk, zero risk. We're still running on my normal percentage risk. So when the market got here, we wanted to see what the market was going to do. What did the market do? I gave this whole setup to us. You could check the card above. You're going to see me linking this analysis, right? We saw an opportunity right here and we said this right here could be the next higher low, right? And we just wanted to see some confirmation. What did we get right here? We, made sense with our trend line to see if the market is going to break it. And the moment the market rejected right here, we saw a consolidation right at this point. If you guys can remember that last trade analysis I made live, everyone is in, a lot of people took that trade, and from the Instagram community to Telegram to YouTube community, and I'm so happy with the screenshot I'm seeing just to start your year. Just shows the knowledge is just really powerful, right? The moment the market broke out of this level, right, I took in the next trade right here because this is the base. This is the base of the retracement. So we're certain about this, right? And again, what factor this area of interest? It's very simple. When you go to the 1 hour time frame, you're going to realize that all of these areas are previous area of resistance, turn support zone, right? So we took a trade from off of that level, adjusted on the 30 minutes time frame, and now we're on this trade. So what does happen again? We transfer the equity of this trade right here, and we moved everything to this point. So what do we do right here? I'm going to show you real quick. I'm going to show you real quick what we did right here. So the moment we got in on this level right here, this trade already was in profit, right? And what we did right here is we transferred the equity of this right here. The risk of this, we transfer it to this point. So the moment this one starts to move and start to appreciate, we break even everything at this point. And now this trade, all this trade right now are running risk-free. Okay, so the first thing we did was move this risk to this point, right? The market came to almost the same point right here. And when the market started to move and break above this level, guess what? We took in a new trade. We waited for it to break the counter trend line. And what do? We break even, transferring the equity of this one officially to this one. Now the market is now breaking this level right here. Guess what? This is running risk free. And then we are still definitely going to be adding this trade. We have no reasons. We're anticipating that the market jump to this level. And when the market gets to this level, we're going to be looking also for another, retracement of a major structure. And guess what? When that happens again, we are going to be adding. And in this case now, we're not even transferring risk again. All we're doing now is we're transferring a part of our equity, floating profitable equity, as a risk for the last one so that we can maximize it. So now for context, let me bring it this way, right? If I'm trading with $1,000, I'm expecting $11,000 here on my initial trade. Now look at the second trade, $17,000. Look at the third trade, $12,000, right? And perhaps we find another trade here. I'm not just going to calculate this because we've not yet seen the opportunity, but you can imagine 12 plus 17, right? This is about 29, right? 12 plus 17 is 29. More reward, right? By just our ability to capitalize. So when you add everything together, is almost going to about 40 right now. 1:40, right? So now it's just about what works for you, right? Think about it this way. For context, so that people can even make sense of it, right? If you started this trade with $100, you must have been projecting 1,100 right here, 1,700 right here, 1,200. When you had everything together, a trade that started with $100 risk might end up you offloading, when you offload your position, on $4,000, and you do that without over risking. Right now, compare it to the guy that sits and wanted to pick every move all the time and win loss, and his equity curve is going up and down, up and down. In this case, your equity curve is jumping up exponentially for every time you offload. And for me, I believe this is one of the most sustainable way you can ever trade the market, in such a way that you capitalize on trend, you decipher the structure within the trend, identify the major structure, and use your area of interest to actually find the level you inject into the market. And all you got to do is transfer your risk from one that you have entered at a more cheaper price, transfer the risk to the one you are entering at a slightly, higher price, and keep transferring the risk. By the time you get to the third entry, you're no longer transferring risk. You're transferring the equity of the profitable, of the floating profit. And this is how you do it. And I hope this really helps you guys to see that this Forex trading is really beautiful. You could treat it like a business, right? And for you to really achieve optimum results here, I must say this, right? The caveat is this: you don't have to look at money. If you look at money, you're not going to be able to do this, because you're going to be doing this out of emotion, and you're not going to be able to find the right point of entry. But just enjoy the process, right? Let the money come in as a byproduct. Enjoy the process. Look at this as a work of art, and look at the market as your canvas. Do a good job, and the market will reward you. So I hope this is really, 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 enlightened a lot of you guys. If you find this content useful, you can like, you can share, and you can subscribe. And if you know that you are not really so good enough and you don't want to lose your money in 2025, I think you should take a step further, get the knowledge that teaches you the real mechanics of how the market works. You do not have to buy props and props. Don't get used to the cycle of blowing account and replacing it. The last thing you want to do in the market is get addicted. And I hope this helps you guys. Thank you so much, and I pray God bless you. Thank you.